Michael, good morning. Good to see you again. How critical is it that lawmakers come up with some sort of a package, and how important is it that they make that happen before unemployment benefits expire on Friday?
I think it's essential that we get another round of stimulus. It's pretty clear we don't have the coronavirus under control, and we're going to have a number of disruptions to the service sector for several months into the future. So we need a kind of a longer bridge to take the economy to a time when the U.S. will be under a more sustainable situation with the coronavirus. So I think it's absolutely essential and to get additional resources to households, to business, as well as to state and local governments. It would be nice if this were completed by the end of July. I think a delay to around August 7th is not ideal, but I think it's something that the economy can handle. If it pushes beyond that August 7th date, I would have much larger concerns. So I think there'll be a little backfilling if extended unemployment benefits are in the final bill, which we think they will. I think if there are missed payments, I think they'll be backfilled. So a short gap should be okay. But if we leak beyond August 7th, I'd start to have more major concerns.
Michael, do you think the U.S. economic recovery is stalled? And if so, what adjustments are you making to your third quarter and fourth quarter GDP estimates?
I wouldn't say that it's stalled. The way that I would say is that we had a very sharp rebound, mainly in the good side of the economy. And that's where you should see it very quickly. When we get the personal spending data within the GDP report this Friday, I think it will show you that spending on goods is about where it was in February. So that side of the economy has had a V-shaped rebound, which means, to your point, going forward, further gains in the economy are likely to have to come from services, and that's going to be much harder given where the coronavirus is in parts of the country in the South and the West. Presently. So I wouldn't say that we've made any adjustments. We're just looking for less sequential improvement going forward. So we had a very strong second half of May, a very strong June. The rate of growth going forward will be a little more uneven. It's going to have to come from services. So I would just say temper your expectations around what some of the monthly data flow may look like.
I think we're all bracing for a shockingly bad number when GDP comes out tomorrow. Michael, I think you're predicting something like negative 35%. Is that right?
That's right. So on an annualized basis, it would be about a 35% decline. If you're just looking at the quarter on quarter math, it would say the economy is about 10% smaller now than it was around February. That's mainly an artifact of the economic lockdowns that were put in place and the sharp slowdown in spending in April. So even though we had rebounds in May and June, it's still likely to mean a very bad outcome for GDP. That's largely in the rearview mirror. I think everybody is expecting that number. I think the information in the report will be to tell us just how far we have to go. How big of a hole do we have to climb out of to get the economy back to pre-COVID levels. So that's really where the news will be.
How damaging will it be to the U.S. economy if that unemployment top-up goes to $200 or even $300 from the current $600?
I would say it would be. I mean, it's not ideal. I think extending it at current levels would be a better income security for households at present. But what I would say, what's more important than that unemployment insurance extension is the labor market strong enough to keep adding several million jobs a month for the next 3 to 4 months? If it is, then the importance of those unemployment benefits will diminish because more Americans will be reemployed and getting full paychecks. So I think that's really where the focus is. And the data right now on that is mixed. The July employment picture doesn't look nearly as solid as it did in June. And I think that's where the concern is.
I just want to ask you quickly about the Federal Reserve. We're going to get their decision in a few hours. Most analysts expect the Fed to stand pat. But what do you expect Fed Chair Powell to say about the pace of the recovery?
I think he'll be balanced in his remarks in the sense that I think the May and June data probably surprised to the upside as it did for us, and I think most economists. So I think the initial reemergence from lockdown is something that they will nod to and say that was pretty solid performance. But then I think he'll shift and say, talk about concerns and the outlook. The coronavirus is still with us. We don't know where the phase 4 package stands. As your reporting coming in suggested, there's still a lot of distance between the House and Senate bills. So I think he will say, yes, the May and June data flow improved, spending picked up, the employment picture brightened, but we have a long way to go. And I think he will emphasize again and again that more fiscal stimulus is needed to support the recovery. I think that's where his emphasis is going to be. It's more about health outcomes and fiscal policy now than it is accommodative monetary policy. So I think he'll really focus in on that part of the discussion.